This is Acmere with the Bulletin Board Heroes here at Vox Markets for Wednesday, the 29th of June. Starting off with the FTSE 100, where we've paused at the 200-day moving average. Yesterday, 73.41. It would have been quite amazing if we'd gone straight through that, but we've fallen down with Wall Street a little. Need a hold, I suppose, ideally 7,200. That would be the best scenario. And really above 71.50 is essential at this stage. That's sort of basically the floor of the channel. But if you're looking for an extra trigger on the upside, end of day close through the 200-day line, 73.41 or so, would be enough to give us maybe further momentum towards the 50-day moving average at 7,400. But at this stage, that's probably the limit of expectation. Moving on to Bitcoin, which has, since I've been covering it of late, died a death, which is maybe a bit disappointing. But here we've got a situation where the consolidation that we had up to 22,000 looks like it is a ceiling for this market. End of day close below 20,000 could lead to the floor of that falling March trend channel down towards the 15,000 area, maybe over the next 4 to 6 weeks. We need to get back above 22,000 to give us a chance of retesting old May resistance at 25,000 over the near term and break that negative pattern that's been in place for quite some time. Moving along to the stocks, and starting off with Avacta, which gave some coverage to on the basis that there was a potential bear trap below 102 pence, the old May support. We've managed to hit the initial target here, which would really be around the 50-day moving average. There's a chance, I suppose, of a follow-on move to the 130s, and that's valid while we hold above the neckline resistance there at 111 on an end-of-day close basis. Above 11, there's still the chance of the 130s for the shares, but at least we've had a bear trap rebound over the near term. Moving along to Brave Bison, which is looking rather more solid than it has done for quite some time. Here we've got this rising trend channel. We've gapped higher today as well. We've got a rising 50-day moving average that does suggest that we could hit the top of that rising trend channel from August last year, as high as 2.25 pence over the next month or so. Only back or well below the 1.75 pence level, and the floor of the channel really delaying the upside scenario or recovery scenario for that stock. On to Deltic Energy, which seems to be trying to break the recent downtrend that we've had, breaking that line of resistance in the 50-day moving average around 2.6 pence. We've gapped up today off support, which is encouraging. And the longer we stay basically above that resistance line, the greater the chance of a retest of 3.6 pence, which was the March resistance over the next 4 to 6 weeks. Moving along to a company which has had spectacular RNS today, I think, Enwell. Here we're still trying to maintain the trend line break that we've had from November. That was above 21 pence, and above that looking for 30 pence, hopefully powered by the latest RNS from the shares. So I think if you like the stock, that this pullback that we've had since the beginning of the month could be an opportunity. Only back below 20 pence, really delaying the idea of recovery there. We've got Inspirit next, which has had a bit of a flyer earlier in the week. Current situation is that we're still looking for support to emerge at around the 0.06 level. Overshot that a bit on the downside to start yesterday, or to start today and yesterday, but it looks as though 5 to 6 will be the support area, and we'll have another chance of getting to 8 or 9 there over the near term. Interesting that the 200-day line looks like it's starting to rise as well. This could mean that we're in the run-up to a golden cross buy signal, and the run-up to a golden cross tends to be the strongest part of the cycle. So Inspirit already living up to that technical theory, but let's see if we can actually get more than 0.08 or 0.09 over the near term. Stop loss now, end of day close back below 0.05. Moving on to Kefi, which has been slightly painful and slightly frustrating at times, perhaps. Here we got the chance of a support coming in there at that November support line, falling support line there, also very oversold there, just under RSI 30. But the problem here is we've got this sort of rounded type of price action there, rounded shoulder, let's call that, from the beginning of this month. And that does warn us that if we do break the 0.5 pence level, there could be further downside here, but at least we've got a temporary reprieve here with the November-December support line there coming in, so that might mean that some keen traders are looking to bottom fish the stock at this point. Upside at the moment up to the 50-day moving average at 0.75 pence as a best case over the next couple of weeks. On to Nuformix, and here we've got this interesting pattern here, bullish divergence. So there we've had lower lows going into June, but the RSI starting to creep higher, which is a good thing to do. We've also broken that resistance there at 0.39, so we could call that neckline resistance on what looks like a saucer type formation. Above 0.39, looking to at least get up to the bottom of the gap down there at 0.58 over the near term, again as a best case scenario, maybe by the end of next month. Finishing off with Tertiary Minerals, and here you can see that there has been a 2-day, 3-day bear trap there below the old 0.15 low, so below 0.15 a bear trap, and we've gapped a bear trap gap reversal tends to be a reasonably strong signal. A bit of bullish divergence there as well, so an uptrend line in the RSI window that could suggest that shares are going to have another go at getting up to 0.22 or 0.25 over the near term, but we really don't want to see price action below 0.15 any time soon. That's it for me today. More updates tomorrow.